All right. Good morning, everyone. I hope you're having a great Wednesday. My name is Jenny. I'm the Senior Program Coordinator with the Entrepreneurship and Innovation team here at the LA Chamber. Really great to see everyone here nice and early. So today we have an exciting discussion about access to capital, and I will go ahead and pass it on to our speakers who are here. We have Dan, Monica, and Lane. So I'll pass it off to Dan.
I'm going to jump in first and just also do a quick welcome here. My name is Kevin Keene. I am the one of the co-chairs of the Small Business Council. I also want to introduce Shanae O'Rourke, who's also a co-chair of the Small Business Council. And I also want to mention we're fortunate to have one of our board members, Brian Moeller, from Wells Fargo as well. So please welcome them. Wells Fargo is not only presenting, but they're one of the sponsors of this program, and we're very, very grateful to have them and their expertise. And then we also have California GoBiz, who's a sponsor of this program as well. So we want to thank them too. You just saw in the chat that Andrea said we'd love to have your name and your contact information in the chat. But what we also want to do to help tailor this program to you and make sure that it's a benefit, we'd just like you to put in the chat just a little bit of information. So the first thing I'd ask is obviously put the name of your company. Also put the type of company that you are. We see someone's a media production company, just so that we have that. And then some semblance of the number of years that you've been in business, and or are you a startup business, growth business? Are you transitioning? And really this will help our speakers get an understanding of where you're at. So as we talk about these programs, they can tailor it a little bit of where you're at. And then finally, what I'd ask you to do before we kick it off is put your questions in the chat. So we're gonna have time at the end of this to have some Q&A and some dialogue. So as you go forward, put your questions in the chat and we'll capture those and then have some time at the end. So with that, allow me to welcome Wells Fargo, Dan, Monica, and Lane, and so grateful to have you guys here, and then we'll turn it over to them.
All right, well, thank you, Kevin. Can you hear me, Kevin?
Yes, we can.
Okay, well, good morning, everyone. Excuse me, I'm a little bit under the weather, so forgive me. My name is Dan Strasner, and I have the pleasure of serving as a small business leader for Wells Fargo Bank, supporting the Southern California area. Really excited to be here today to talk to you all about the steps that you can take to build a stronger credit profile as a business owner. Also, through this presentation, we'll talk about some different financing options that are available to y'all. Now, Kevin asked a question for you to put in the text chat on what stage you are with your business. And this really gives me a better understanding of where you are in that stage, as we're going to talk about that later in the presentation. Also, in the text chat, you're putting your questions. Hold those questions till the end, because at the end of the presentation, we're going to have a panel available to answer any questions that you may have. So if we can go to the next slide, please. All right. So your most valuable asset is good credit. So as a business owner, it's imperative to have that good credit. But strong credit isn't something that you simply have or don't have. Building credit, think of it as something that you have to be proactive at. It's an ongoing process that really takes careful management. So today, we're going to talk about how you can manage your credit, what potential lenders may look for, and we'll talk about that life cycle, that stage that you're in, and also the business life cycle. And then there's so many financing options out there for y'all, and we're going to look to see what type of options may best suit your need. And then we'll go over some resources for you that you can leverage. Go to the next slide. Okay, one after that. So I talked about credit being an asset. And when you think of successful businesses, they don't guess about it. They actively manage it. They're proactive in really building that credit. And businesses can rely on credit to provide that working capital, if you will. Also support the plans for growth and capitalize on the unexpected opportunities that may come up. Sometimes it may make sense for you to use cash if you have it on hand, but there's going to be times when a business owner needs to use that financing. It's also imperative that you build that relationship with your banker, because when you go into a bank, regardless of that bank, they can do that financial review for you and really review where you are with your business in the current situation and help you discuss the future plans and prepare for the unexpected, if you will, and help you make that informed choice. So that connection with your banker is a valuable resource as well. Let's take a look at how you can control your credit profile. So credit profile is everything that a lender will see about you in your business. For example, your business practices, banking relationships, passing and current financial activity. Those are some things they may see. So let's start by creating that sound financial footing, if you will. So even though right now you may not have any immediate plans to apply for a loan, you want to start taking those steps to build that credit worthiness for your business. You want to be proactive with that. You may not need the loan now, but there may be a time where you do. So there's no time like the present to start. You also want to separate your personal and business expenses by establishing dedicated business checking and savings accounts. You don't want to commingle your personal and business. You want to keep those two separate. And it's a good idea at least once a year to get a copy of your credit report. See what's on there. Is there anything that you need to clear up? Something that is on there that shouldn't be? Does it look like you expected it to look like? So we'll talk about that in a few minutes, but take the opportunity at least once a year to pull up your credit report, go and get a copy of it. Banking strategically is so important as well. It's that solid banking history, if you will, that can boost your overall credit worthiness. And because sustained cash flow provides that clear evidence of your ability to repay that loan, right? And we're always looking for that healthy cash flow. We're a cash flow lender, and you'll hear the word capacity. And when we think of a 5 C's of credit that I'll go into in a little bit, and your capacity is really your ability to repay that loan. And that's so important from a lender's perspective. Now, if you have different accounts at different institutions, that's fine, but you also want to consolidate. Sometimes folks have a lot of different accounts in all the major banks, and they also have lines of credits or credit. Well, if you tap out that credit and you max it out, do you have the ability to repay that? So sometimes you want to consolidate the different accounts that you have into maybe a few institutions and not so many. And then we talked about cultivating that relationship with that banker. Visit your bank or banker regularly. Your banker should know what your goals are and your situation is, so that way they can help you plan, again, for the future and give you enough information where you can make that informed choice. All right, if we can go to the next slide, please. So lenders may review your personal and your business credit reports when making that credit decision. And when you think of your personal credit report, that would include like your payment history from credit financing, if there's bankruptcies or tax liens, or if there's inquiries. Maybe you're in the market or you're shopping for a car and you've gone to 5 different dealerships and they all ran your credit. That will impact your credit because it's a poll and it's an inquiry. So that lets the lender know that this person's looking to buy an auto or maybe lease an auto, right? So those are some things on a personal credit report that's looked at. Now, your business credit report includes the same information plus your history of payments to other businesses like vendors and suppliers. So keep in mind that when a report is pulled, we're looking at both the personal credit and the business credit. Now, your credit score, that's information from your credit records, and that generates that single number, if you will. And there's key elements that go into that number, such as your payment history, your outstanding debt, how long your credit's been established. And then your personal credit score, most commonly, you probably heard it as a FICO, that Fair Isaac Corporation. That's your FICO. And when if you have our mobile app at Wells Fargo or go to wellsfargo.com, what's really, really neat is that you can pull that information up. You can click on your FICO, see where you are with your FICO, and it gives you a 12-month running total. And you can see month to month where your FICO is. And if there's anything and you want to order a credit report, you can order that as well on wellsfargo.com, or if you have the mobile app.
Hey, Dan, I'm going to violate
All right.
the whole Q&A. I just violated it. How do you get a business credit report versus a personal credit report? Can you just spend a handful of seconds on that?
You would go in and you would order it. If you were on wellsfargo.com to get your credit report, you would click on that, depending upon how that account is vested. So typically it's a personal credit report that we give off of the wellsfargo.com. If you get the business credit report, you would have to request that separately. But we pull both and blend that to look if you are applying, say for credit, both the personal and the business side is looked at. But when
Okay.
you pull your credit report, it should have everything on there.
Thank you, sir.
My pleasure. All right, if we can go to the 5 C's of credit. So there's lenders that look at a borrower's credit worthiness, and they use some version of what we call 5 C's of credit. So this gives you a sample of that. And a credit history basically shows how you've handled your credit obligations in the past. And this is an indicator as to what a lender may expect in the future. So as a business owner, your personal and your business credit histories are both relevant, and as is the information on your outstanding debts. And that would be looked at under credit history. When you look at that second C, we refer to that as collateral. That's usually security. So can you offer a backup source of repayment for secured financing? An example of that may be investments, real estate, or equipment. Could be different types of collateral that we consider. When we say capital, what we mean by that is it's the means of business assets that can easily be turned into cash. Typically, the more of your own money that you've invested in your business kind of shows that lender that you're committed in that business. You're investing in yourself for the success of that business. When you look at conditions, it's everything that affects your ability to repay that loan, including internal and external factors. And you think of an internal factor would be the conditions that include your plans for that loan. If you think of an external factor, that's things out of your control. It could be industry or economic trends, it could be your customers, maybe the competition or regulations governing your industry. And then the last of the 5 C's, we talked about capacity, which is really your ability to repay that loan. So let's take a look at what potential lenders may look for. Now, if you can understand what a lender's point of view is, the more effective your proposal can be. So if you show your potential lender that your company has that steady cash flow and you have an effective business plan, you may more likely be able to obtain credit. Now, when you approach your banker and you're seeking credit for your business, a good practice is be prepared to discuss these 4 key topics. What's the credit purpose? You want to be able to explain exactly how you're going to use that money and why that amount you're asking for is realistic. I would ask that when you're speaking to your banker, be transparent about what you need the cash for, right? We ask for candor, so exercise that candor, be transparent with that banker exactly what you need that for. Credit history, make sure, same thing with the transparency, that there's no surprises on your credit profile. You know, if it's in your payment history, and this is including vendors. So up front, let that banker know. And then when you think of company finances, your ability to demonstrate how to repay that loan is critical, especially when you're looking for those larger unsecured loans. If you can provide cash flow projections for at least 12 months, that shows that you're on top of your finances, and that helps for any seasonal variations. When you think of the application details, and I want to underscore the importance of this, you got to get the dates and the details right and ensure that your sales and your income numbers match on what's last year's tax return. Again, dates and details are right, and ensure your sales and income numbers match on what's on last year's tax return. Failure to do that will delay the loan. It will slow it down. We will always, with our risk hats, make sure to cross the T's and dot the I's. And you want to help yourself by making sure that all that matches when you come forward or when you're asked for that and with the tax returns. So make sure that that matches and do your due diligence on the application details. That's a big one. Let's see how we can enhance your cash flow. So there's some ways that you can enhance it. You can accelerate your inflows. And what I mean by that is send your invoices immediately. Make sure you offer multiple payment options. That enables you to bring in more revenue. You want to be able to monitor your costs, so track your regular bills and due dates. Understand how often your inventory turns. And a big one is know your payroll obligations. Watch for your outflows. So use the business credit card, and when you do, take advantage of the rewards program or the volume discounts that it offers. Cover your taxes, that's a big one. Set aside an appropriate percentage each month to avoid those penalties. And lastly, I challenge everyone on this line, ask yourself, are you getting the maximum value for every relationship? And then in addition, are there expenses that you can cut without affecting your profitability? So Kevin asked about the stage that you're in. Let's take a look at that business life cycle, if you will. So you can see that first one, seed or startup. So maybe you're starting your business. No time like the present. That's a critical time for you to start doing credit planning. Don't wait until you need it. Startup is a perfect time for you to start at credit planning. Build out your business plan and then develop a funding strategy. And as I mentioned before, investors prefer entrepreneurs with some skin in the game per se. So a substantial investment of your own money sends that message that you're committed to making your business successful. And when you think of likely sources of a startup funding, that may include your personal and family assets. It could include business credit cards or that business line of credit, healthcare financing startup loan, outside investors, or even micro lenders. Look at the next one with growth. So as your business grows, your financing is going to change constantly. And you want to be able to take advantage of opportunities as they arise. So some things that can help you prepare for that is maybe having that business line of credit or that SBA loan. Maybe it's refinancing and purchasing loans secured by commercial real estate. It could be commercial real estate equity loans or line of credit. Healthcare financing loans with refinancing existing debt to improve your cash flow. Here's some things to think about as you're in that growth stage. We go to the maturity stage. You don't ever want your business as it's maturing to stand still. If you stand still, you're going to get left behind. So you want to keep moving forward to stay ahead of that competition, improve the efficiency, and then give some thought to the financing as well as your business matures. So strategic funding decisions might include paying down your debt, refinancing that commercial real estate equity, maybe opening a commercial equity line of credit or that loan. Now we move over to expansion. And I think everyone on this line, as maybe you were impacted, you know someone, we all know someone that was impacted with the pandemic. Good, bad, or indifferent. Some that were impacted in a negative way, and some that flourished. And when you think of expansion, I think of the pandemic with the vets, the veterinarians, and a lot of folks going out and buying COVID puppies, is what we call them. Or when you're staying home, all the projects you're doing at home and the construction business just took off. Well, imagine being in that field and overnight, you can't keep up with the demand. So maybe you need a bigger location to store your inventory. Maybe you need a storefront. You need to expand. So some things to help you with that expansion, when you think about that, is that commercial real estate financing, or again, that SBA loan. Or it could be, if you're in a practice, depending upon what you do, healthcare financing loans. Last step is the transition piece. Now, whether you're planning to sell your business or keep it in the family, you want to enhance its value and stability. That's so important. Make sure any significant debt is optimized for long term. And at this stage, you may want to consider paying down the debt. Maybe refinancing that commercial real estate equity. So let's look at our financing options. We have secured and unsecured. So secured financing is typically backed by collateral that we talked about with the 5 C's of credit. And you would use your personal or business assets such as equipment, commercial real estate, maybe it's a vehicle or investment. Unsecured depends on your personal and business credit profile. So we talked about your credit profile, right? Also having that strong cash flow, that would help get an unsecured loan. Now, for this reason, unsecured financing tends to be approved for smaller amounts than secured. So just keep that in mind. Now, let's look at some financing options that may be right for you, depending upon where you're at. For those of us that have a personal credit card, business credit card is very similar. It's a great way to help you start establishing credit. It can also help you manage your monthly and daily expenses. Maybe it's a business line of credit is what you're looking for. That's that revolving account that lets you borrow the funds when you need them, given up to the maximum amount. You can also pay it off at any time, and you only pay interest on the outstanding balance. You heard commercial real estate financing a lot through this presentation. This really allows you to do a lot of things to obtain that funding to expand your business, or maybe it's purchasing that new commercial property. Maybe you want to free up cash by refinancing at a lower rate or an extended term, or borrow against your equity for that business-related event. When you think of an SBA loan, government guaranteed, you got the fixed or adjustable interest rates. And again, if you have your practice, a dentist, optometrist, physician, a veterinarian, healthcare financing supports that, and that's that line of credit and fixed rate loans with a variety of repayment options that we offer. The next slide, please. So I want you all to know that, and keep in mind that not all financing comes from traditional lenders like a bank. You can think outside of the box, if you will. And there's other types of financing like seller financing. And those are the big ticket items like your real estate, large equipment. Think of vehicles. They might be available and sometimes they may come with that sales incentive of 0% interest or maybe a lower sticker price. Factoring, or I like to think account receivables financing, that's another way to get money from your business account receivables earlier by selling the invoice to finance company in exchange for a percentage of the invoice amount. Now, this could be an option if your business is in need of immediate cash flow. Also, peer-to-peer lending is another one. And this is where online companies create this forum for small businesses to connect with investors offering credit. Now, when you think of the mission-based lenders, this community development grants and loans that may be available from them, consider the community development financial institutions, and I'll go into this in a little bit. They're known as CDFIs. And then there's a community development grants that also may be available. Think of the nonprofits dedicated to helping the small businesses. They provide those loans and grants, usually backed by donations or government funds. Let's take a look at some of the resources. I spoke about CDFI, and it's on, we'll send you the links and everything, and I know the Chamber is going to send that out. BizResourcesNavigator.com, you'll see this, and there's over 85 partners, CDFIs, that help the small businesses. And they're mission-based organizations that focus on generating economic growth and opportunity. And this is a great way to access capital, right, depending upon where you are. So that's a site that's available to all of you. Now, I also want to state a fact that since 2015, Wells Fargo has provided more than 500 million, again, 500 million in philanthropic grants and investments to CDFIs to help underserved small businesses. So 500 million since 2015 that we've invested. And really giving back to not only our communities, but to the economy to help our small businesses succeed. Some additional resources. And again, I know that the Chamber will be emailing these out separately. We talked about the CDFI resource. On wellsfargo.com, under Small Business and Business Resource, you'll see Women Entrepreneur Resources. That's a great, great site. A new site that just got loaded was our Diverse Small Business Owners Resources. And you know, when you think about tips to run your business and how to grow your business, both of those links have a lot of information on there that's completely free to anyone, with some good tips and resources for y'all. So that gives you a high overview of business and capital. And with that, I'd like to hand it off to our Small Business Regional Banking Director for the Pacific Region, Damon Dishman. Damon?
Well, hi, and Dan, thank you so much. What a great recap you provided the entire group. And we're going to do a little bit of a Q&A session here. And I may call on Kevin just to give me a sense of what kinds of questions we've got in the queue so far. I've got a couple ready to get us started, but wanted to see if we've already got a queue worth coming in.
We do, and my golly, we've got about 3 hours worth of questions. So what we're going to do is kind of like we'll do rapid fire, and then we'll do that. I would first just say thank you, and I would ask our Wells Fargo friends to put your contact information. Some of the questions that we're getting are effectively, how do I get started questions. And so I think, you know, it'd be great to put your contact information out there, and so that they can reach out to you directly. So I'll ask our Wells Fargo friends to do that. So I'm going to start in no particular order. I won't tell you which one are selfish questions for me versus which are coming from others, but you poked here. First of all,
great. Hey,
good.
Sorry, Kevin. Could we, before we dive in, sounds like we've got a lot of questions. Can we move the slide? I'd like to just do a quick intro of our panelists before we dive into the Q&A. So real quick, everybody, again, great to be here, and thank you so much to the LA Chamber for bringing us in to support the small business ecosystem like you consistently do. We're all delighted and proud to support all of the great work you all lead. My name, real quick, is Damon Dishman. I'm the Small Business Director, and I help lead and execute, or I should say, build and execute our small business strategy for Oregon and California. And folks, we really put together an awesome panel for you. So I want to turn it over to Monica next to introduce herself, and then we'll go to Lane, and then we'll jump into our Q&A.
Thank you so much, Damon. Good morning, everyone. Pleasure to be here with you guys today. My name is Monica Medina. I am a senior small business relationship manager covering the LA area. I've been with Wells Fargo for 11 years, and in my role, I have the pleasure of speaking to business customers day in and day out, learning about their needs and helping them grow their business. So it's definitely a pleasure to be here speaking with you guys today. Pass it over
Thank
to
you.
Lane.
Thanks, Monica. Thanks, Damon. Good morning, everyone. My name is Lane Florquist. I'm a senior small business development representative. I serve different market segments here in the greater Los Angeles area. And my role, I get to partner with Monica on our team and support small business from a credit, commercial real estate, cash flow operations perspective. And happy to be here. Happy to, provide some insight as we might be able to for your questions. And I acknowledge all of you for being here and taking the time to get some additional information. We'll see what we can do to help support your business growth.
Love it. Thank you, Lane, and thank you, Monica. So Lane is out there, boots on the ground, talking to a lot of business owners in a lot of industries, and just has a tremendous amount of experience in his business development work. And then Monica really is that dedicated relationship manager that stays, what I say, hip to hip or in the co-pilot seat with her book of customers. So again, we've worked hard to put some really good expertise in front of the group here today, Kevin, and excited to jump into the Q&A.
Excellent. I need to go back to, this was a question in the chat and I violated our sacred Q&A rules. When I find out my business credit, is it just like personal credit where I put in my company name and my TIN? And then who does that? Is that the same credit rating agencies that do personal credit? Can you just give a smidge more on what that is?
Yeah, I'll jump in and answer a little bit on that. And then Monica or Lane, if you have anything you want to add, just jump right in after I finish up. Think of it like this: your personal credit profile is going to be your primary credit profile. I think with most lending institutions, we take a very close look at the consumer credit profile, and then the business profile. A little bit of that depends on how the business is organized. So if it's a sole prop, which a lot of startups are, that's all consumer. It's just doing business as a business name, right? But as if it's organized as an LLC or a corporation, then in a sense, that non-individual entity does start to build some credit profile, and it can build just like a consumer profile, right? It will look at, or the score would look at things like how much credit has been accessed, how long has that credit been available, how's the payment history been, et cetera. So there can be a credit profile on the consumer and the business side is the short answer. And then there's also some other kind of credit type indicators like Dun & Bradstreet, right? Certain businesses might be enrolled or a part of the Dun & Bradstreet measurements. And that can also be a factor that lenders look at. Their history on Dun & Bradstreet. It's not the same as a FICO score when you look at some of those types of indicators, but they can be a help or a hindrance when you think of the whole credit picture that a lender might look at. Monica or Lane, anything you want to add on that business versus consumer credit piece?
Damon, I think you were very thorough. I think it's important to understand what the Dun & Bradstreet reports are for your business if you have one outstanding before you're applying for credit, because like you said, it can hinder your application, but you covered everything pretty thoroughly. So I would agree with everything you said.
Great. Okay, Lane, were you going to say something? Sorry.
Yeah, the only thing I would add is when you're looking to review your business credit and you might be interested in a credit application or a conversation around that, your personal credit is always going to be associated with that review and that opportunity. So ensuring that you're taking strides to manage your personal credit throughout the rest of forever is an important component, in addition to thinking about how you're managing your business credit as well.
Okay. I'm going to also pause. There's some very specific questions in the chat around underwriting for working capital versus commercial assets. So we'll try to get to some of those. But again, I'm going to encourage you, you've got contact information here. Please take a print screen. So if we don't get to those very specific questions, then please reach out directly. And then I'll ask our Wells Fargo friends to see who's asking those two, so you can do that. Okay, I'm going to go back now to what we just said. Dan had said something about a financial review. Look at your business, and that just sounds like a good business practice. It's not unique to credit, it's not unique to getting working capital, but this whole notion of going through a financial review, and then now, Lane, thank you very much, going through a personal financial review. It sounds like it's I don't want to say an audit, but it's a cleansing, it's a detox, whatever you want to call it, of your finances. So can you go into a little bit on, and again, selfishly, I'm like, oh, I need to do that. I'm not sure I need a working capital loan, but how do you do that? How do you go through and figure out whether you're in a good place with how you're running your business, regardless of whether you need capital? Can you elaborate that a little bit more?
You bet. Monica or Lane, one of you want to jump in, or I'm glad to tackle that one.
Yeah, go ahead and kick us off, and we'll fill in.
Add in. All right. So here's what I'd say. If you go back to Dan's presentation, he talked about really thinking about your credit profile as an asset. And when I think of that terminology, we really want to care for that credit profile and nurture that and help that profile be as robust and as healthy as it can be. Maybe, like you said, Kevin, at times, and that maybe is the pandemic and how shutdowns really impacted the way businesses operate and their income, or the supply chain issues, right? Where all of a sudden businesses were not able to get the goods that they were using to create their products or to sell to customers. The closer relationship you have with your bank, the better they're able to enable those challenges and better able to support. A lot of times we see customers that do their consumer banking at one institution and their small business banking at another. Kevin, we recommend doing both together because, again, that allows you to have more constant contact with that bank. The better they understand your business and how your business operates and what your cash flow cycle looks like, the better they're able to help. It's really that simple. So developing that relationship. Most business surveys and things like that I've studied, at least 3 to 4 times a year, a business owner should be meeting with their banker, particularly for small business. Maybe that's a little less frequent on the consumer side, but 3 to 4 times a year, I would suggest as a minimum in terms of frequency of meeting with a banker to do a review and see, are there products, services, promotions, et cetera, that might better enable the cash flow or the operating cycle of that business.
So again, I'm going to poke here. You're not saying anything that's too fancy, right? But I have a bank and I go in and I say hi to people and, talk. So I know people, they know who I am, but you're describing something that's a little bit more direct and purposeful. And, again, I've been doing this myself, but who do I go talk to? I have a business account, but I'm still not making the connection between what you're saying. Is there a business banker specifically that I need to talk to? Or is it, again, not to be funny, but I talk to the nearest teller I have and say, hey, did you know? So I close that loop for me a little bit, because I understand what you're saying, but it's still not clear to me how to do that.
Damon, if you don't mind me jumping in here, wanted to just mention that I feel like it's also as important to have a strong relationship with your bank and a banker, an individual at the bank, as it is having a strong relationship with your tax preparer, your CPA. I think it's just as important to have those contacts on a yearly basis with your bookkeeper, your CPA, tax preparer, as it is important to maintain that relationship open with your banker. To answer your question, I would bring it up to the teller if that's your easiest avenue to open that door. The teller at Wells Fargo will direct you to the correct person to speak to. If you land and speak to a business banker, I would hope that they would plan to, have a follow-up conversation with a CPA. In my role, I have the chance to speak to my business customers along with their CPAs, tax preparers, or even bookkeepers to kind of just make sure that we're all in line with the end goal for any given year, or just to kind of see, how is my business doing? How am I doing if I'm planning for a loan in the next year, the next 2 years? So I think to add value to the conversation with your banker, I think it's also important to have a strong relationship with your CPA and also have those conversations, as a team. With me as a relationship banker, I'm able to be a part of the teams for my business customers. So, utilize your business relationship banker as your extension at Wells Fargo to kind of help you navigate through the bank, but also keep them as part of your team and include them in conversations that you're having with your bookkeepers and your CPAs. So I think that's a strong recommendation that I would probably leave for you guys today. But Lane or Damon, if you guys have anything else to add.
I think you did a great job, Monica. Thank you. Kevin, we might just ask, is that? Oh, Dan, go for it. Yeah, please.
Yeah, no, I was just going to add, so Kevin, if someone is looking to connect with a small business banker, we have a make an appointment app that you can make an appointment, and what you put in that your purpose of the visit, that manager goes through and then assigns it to the appropriate banker, which in this case would be a small business banker. So that way you get to the correct banker versus seeing, say, an associate banker. You get someone that specializes in that area.
Okay, I'm going to transition to another, and again, I'm going to ask my Wells Fargo's friend. There's a ton of things. I'm not going to get to all the questions, but there's some very, very specific questions in here that we can get text on the chat. And for those that are asking those specific questions, please do that. Okay, so we've got, I think there's almost 75 people on this call, maybe 80 people on the call. A portion is we've already talked about in prep for this meeting. We support a lot of diverse small businesses. We talked about the pandemic. Even looking at this, I understand what it is. It's a bit intimidating, good friends. I'll be honest with you, Wells Fargo friends. It's like, sweet mother, business strategy. I'm hold up with the business strategy. But I'm bringing this up because we've got a number of businesses that have tried this process and or are in need for a lot more handholding. They're not coming with a business plan. They're not coming with the credit report. They're not coming with all the fancy stuff that you've talked to. They're coming with, I need money. I need credit. They've tried it before. They need more help maybe than your traditional, or they've gone back. They're women, they're diverse, they're small. They're all sorts of where their needs might be different. Their businesses might be different. So, okay, let me play cynical here. All right, this sounds great. It's a nice PowerPoint. It's clearly formatted. But what are you guys going to do to, really help handhold through this process? So what do you offer to really bring, the folks that you have along on this process? So I'm poking a little bit here because we really have folks that get it. They're looking at it like, oh my gosh, I've got to look at my credit report, but they're going to need a lot of hand-holding. So how do you help them in this process? It's a loaded question, by the way, so please answer it correctly. It's a loaded question.
Kevin, there's a lot there to unpack, and I appreciate you putting it out there for us to support. If we go back into that slide, we're really proud. We launched a website to support diverse small business owners, and it really is trying to get to some of those unique and core needs that those customers or entrepreneurs might have. If you go forward one more slide, and then we'll actually come back to this one in just a minute. So we have this diverse small business owners resource powered by Wells Fargo Works on wellsfargo.com. So if we go back, and there's a specific site for women-owned businesses, and folks, there are articles, there's infographics, and we've even hosted some webinars where we brought some women-owned entrepreneurs and done a panel discussion to help really try to bring some real relevant information to the audiences that desire that. And so these really are the resources that we can provide that are self-service. If you go back to that previous slide, I'll tell everybody how to get there. It literally is wellsfargo.com. And if you click on the small business tab on wellsfargo.com, you'll see several different resources available there. I would also really highly recommend that business that's working to start up, find a business planning tool. I'll bet the chamber even has some resources around business plans that your folks could leverage. But we do find that entrepreneur, that aspiring business owner that builds a business plan has a much higher likelihood of success, both in the business and the startup, getting it launched. So those are a few tips I would give. Lane, Monica, anything you'd want to add to Kevin's questions there?
No, I think to piggyback off what you said, Damon, with the business plan, you all have your vision, and that's why you're here, and making that into tangible action items with the business plan is very, very important. And the bank can support you. The business banker, relationship banker can support you much better when we understand how your vision gets applied, and the industry, what your operations are going to look like, what your capital requests are going to be, how that flows throughout the year. We are here in this role because we love to support where you're headed. I'm a past small business owner myself, and I get to do this every day to bring you guys along as well. And when we see your vision, but also have a good sense of how you see the day-to-day playing out, then we can look to apply our products in recommendation space to say, all right, this is where I think this would fit. This is when it could become useful. And we get to work alongside you once we have some of those details lined out in the business plan.
Okay, so I want to acknowledge Andrea just put something in the chat. The chamber has resilient business advisors that can help with that. So if you're looking for specifics, and we've got a couple questions of, is it detailed or high level and some of those things. And I think that might be an individual conversation based on what you're doing. How long does this process take before I get my check and I can start for my stuff? So if I call you tomorrow, when can I get my money? I'm saying that facetiously, but how long does it take to underwrite some of those things?
I'll take a lead.
Yeah, go ahead, Monica.
Go ahead.
Yep.
Sorry, I was going to take lead on this. I just think it depends on what the request is. We have a few resources that can drive us through different avenues, whether it's commercial lending, whether it's unsecured lending, secured lending. There's different factors. And then when it comes to running credit for the business, for yourself, we can run across different factors that can extend the time of the application. So it is very dependent on what the request is. So I would probably say could take anywhere from a week to a couple months, depending on what the loan request is. I know we work closely with SBA for a lot of startup loans, so those can take some time. But if you're looking for something immediately, I would just be prepared to have that conversation with your banker and just be open to the discussions and the solutions that conversation could bring you.
Okay. So let me go back to something that you said, because there's been a couple questions around underwriting. So you just mentioned a couple. So there's working capital, secured, unsecured, and I don't remember the other ones. Can you give some semblance, hypothetical dollar amounts and or underwriting requirements? That's a loaded question, takes a lot of time, but can you just articulate a little bit to say, okay, I need working capital, what
Sure.
typically do you do? Can you go into that?
Sure. If you are looking to start up a business, let's say it's a startup loan, and you have nothing but a business plan, you're looking to get funding from Wells Fargo. If we're able to help you with SBA program could take anywhere between 60 days to 120, depending on what the request is. And we'll work closely with the business owner and try to get to a timeline that would work for you. When it comes to unsecured credit, if you're looking for a simple credit card just to cover day-to-day expenses, that could be a simple 2 to 3 day application process, in which case very simple 1 or 2 page application. Underwriting takes place in about 2 to 3 days before we get an answer, and then you can get a credit card for expenses in as early as a week and a half after application. So can be very fast, just depending on what avenue we take for credit.
Okay. And then what if I have no clue other than I know I need money and I'm not sure your fancy secured, unsecured, credit card, working capital. I mean, let's say I've got a pretty good idea. How do I know what to ask for, right? How do I know what to come in and say, oh, I'm coming in for a working capital and this is what I need? What if I'm starting scratch and I say, I know I need something? How do I know what to ask for, I guess? And what questions are you going to ask me so I'm being prepared for that?
Sure. I think it's okay not to know what you're asking, where you're looking for. And Lane, I'll let you chime in also, but I think it's also important to just let your banker run that conversation and drive that conversation to see what the best fit for your needs are. So it's okay not to know. If you're saying, look, I'm just short on cash every month and I'm having to dip into my personal funds, I need a solution for this. Just bring that conversation to your banker. Or if we also have a tool on Wells Fargo where we're able to let the business owner play with our credit solutions and see what the best fit for you is. But if you want to speak to someone live about it, be open with just your need. You don't have to necessarily say, I need a credit card. We can identify that need for you. If it's a credit card or if it's a line of credit, we'll be able to identify that for you. Lane, did you want to add?
Yeah, just a little bit to that. Thanks, Monica. The option here is to come with your vision, come with your story, and come with what you believe you think your need is. And then we get to ask a variety of questions to try and distill down what that might look like from a process, a product, an application, and get a sense of where you're actually coming from. Because you might not know without us asking some pointed questions from our perspective about where you need to go, because you've never done it. And that's where we get to come in with some of those directional questions and some pointed questions. And then we get to learn about what you're trying to solve for, and find the right fit within that, whether it's, an SBA product, a line of credit, or commercial real estate, business credit card, unsecured line of credit. Understanding, what I need to know is, what does your projected cash flow process look like? What are your operational process? What does that look like? So I can get a sense of, do you have inventory? Do you have accounts payable? Are you aware of what net 30 terms looks like for your cash flow? Do you have discounts available? Is accounts receivable something that you're going to be needing to manage? Or is your business service related and you just have human capital? We get to understand the details of your business, so that we can find out, okay, this is where this product might benefit you. And, one of the things that I've always found valuable is we always hear the cost of doing business. And in this rising rate environment, that becomes a consistent topic. What I like to reframe that as is, how are you investing in your business? And what's that investment look like? You've spent a lot of time, you've spent a lot of energy. Sometimes it's going to require $1 being moved from side to side. But when you're focused on it as an investment, it shifts the focus a little bit so we can support you with the right product as we understand where you're headed.
So this is a two-parter. Part number one is, how much does all this cost? Let's say we go through this process. Is there a cost for sitting down and chatting with you and figuring out whether you need a loan? And then the second part is, you shared all that Wells Fargo is doing. Obviously, Wells Fargo is not a nonprofit, but there's fees associated with this and there's other things. Hey, you want to give us a little help here? You know what I'm saying? No, so how do you, what do you charge and how do you help these folks that really need the cash? And I'm trying to ask the question without directly asking the question so that you know what kind of question I'm asking, but can you kind of explain what does it cost? And then are you, I guess, generous with your ability to help with the cost of doing business, if you know what I mean? And I think you know what I mean.
Yeah, I'll take that one. Thanks, Kevin. It's great question. Love the two parts. First of all, there's no cost at all to come and set an appointment with one of the bankers. I'll reinforce, please take advantage of the contacts we provided you all today, because we can help get you connected with that right banker, depending on your specific situation and the questions you've got, or we can tackle it with you directly. So that'd be step number one. But there's no cost to come into a branch. Like Dan mentioned, if you're a customer already, you can schedule an appointment through your mobile app or wellsfargo.com or simply visit a branch. Don't always expect to be able to walk in and be able to sit with someone at the moment. But certainly by appointment works really well to protect your time and the time of the bankers. As far as the cost of Wells Fargo doing business, I like to think of it like this, with a company of our scale, one of the benefits to the customer is we can do business at a much cheaper rate. And so, it's ultimately the interest rate that's paid on loans, or the fees that are charged for our products or services that enable us to do that. But with a company of our scale, it's very, very efficient. And so our prices for our products, our rates for our lending facilities are very, very competitive. And then it depends on the product too, Kevin. We've got a really cool product that we work with the Small Business Administration on. So if you're a business that's 2 years or younger, we actually have a line of credit that you might be eligible for that is co-underwritten by the SBA. So it's a government program to promote small business, right? And we are unique as an institution to be able to provide a product like that. And some of that's based on Wells Fargo's scope and scale, but a lot of it's based on our commitment to small business. We have been a leader in small business for a long, long time. And it's because we know that if small businesses are thriving and successful, then our communities are thriving and successful. And there's no way a bank can operate if the community's not thriving. So it really is a mutually beneficial relationship in terms of how we approach small business at Wells Fargo.
That's great. It's so funny. I'm glad we're recording this because we're going to hold you. I'm going to call you up and say, Damon, you remember when you said, and then I'm going to call you and I'm going to repeat this. Okay, friends, we actually have more questions, but we don't have time for it. So let me thank deeply Dan, Lane, Damon, Monica, Brian, not a competition, but really this has been an incredible session and so valuable. And folks on the call, in the chat, you can save the chat on Zoom. So if you haven't, go ahead and do that because all that's on there. Let me thank, again, Wells Fargo again for sponsoring this. California Go Biz was part of our Small Business Advocate. And then I also want to remind you, our next session is January 25th. We're going to talk about new laws, tax credits, and incentives for 2023. Sincerely, thank you so much. And I'll encourage everyone, I know I didn't get to all the questions, but please go ahead and reach out directly and they can help you. So again, thank you so much. And you guys have a great holiday. Thanks again.
Thanks, everyone.
Thanks, everyone.
Before you leave, there are a few announcements. So this is our last Small Business Strong for the year. So we will be out for the holidays, but we do have still resources available to all of our small business owners. So we are offering our Resilient Business Advising Program, which is free for all of you small business owners. So please take advantage of this while you can. In addition to that, we are offering Verizon courses that are available to you for free as well, and you could do it at your own pace. And then we have some upcoming Small Business Strong and Small Business Council in the new year. So those will be taking place in January. And then happy holidays. We won't see you for a little while, so we hope you have a great time away or off, and enjoy that time. So thank you so much and have a great day, everyone.
Thank you very much, everybody.
Thank you. Goodbye. Happy holidays.